Hello and welcome. You're watching India Market Open. It's been a very busy weekend, one in the world of sports and the other in the world of politics. You want to take off with what happened to Trump?
Oh my God. I mean, an assassination bid. His ear gets grazed. Trump gets up with his fist raised up. He was already ahead in the points before this happened. And now one reckons, and the thought seems to be that Trump is way ahead, because he's gotten up after he almost got killed, and the bullet grazed his ear and raised his fist and pumped it up. So a lot of adrenaline, yes, politically, and you're right, it's a very sports heavy weekend. Football, Wimbledon, all of it.
You're absolutely right. But Tamanna, talking about Trump, of course, this is all he needed in that sense, right? I mean, a victory almost a given now for Trump in that sense. But more importantly, there were parts of the US, I think, talking about how this could have been potentially staged. But I don't know how you could stage a bullet literally crossing past your ear so meticulously done.
He was ahead even before. So that's, politics gets nasty, and that's an uncharitable. The fact is that there was an attempt on his life. And it's going to be the biggest talking point. I mean, the US markets at least have already pretty much factored in a Trump victory, and that becomes stronger from that point of view. And then actually, let's come to that bit, what the global setup looks like in a very, very exciting week. Pretty much just 1 week left to go before the big budget announcement. Markets are at all-time highs here in India, and the cues coming in globally are supporting that enthusiasm undoubtedly. Look at how the US markets have closed on Friday. The Dow over 200 points up, above the 40,000 mark, so has hit all-time highs as well. The Nasdaq also up, Dow futures up in the green. And it's not just about mega cap tech stocks right now. You're seeing a rotation in play after you saw better than expected CPI numbers, retail inflation numbers. Sector rotation is becoming crucial and is becoming the theme. In fact, the WPI numbers that came in on Friday weren't that great, but the street just ignored them. Right from the equities to even treasuries, because look at the treasury yields, 10-year at 4.18%, so sub 4.2% on the 10-year treasury, and that's a great setup really for India. Let's just pull up what's happening with crude right now. And crude also has snapped its winning streak. So crude has also been fairly benign, NYMEX at 82.32. Let's look at Asian markets and how Asia is opening up, because your implied open on India's side at least looks very, very positive. Asia is towards the negative side, opened fine, but mixed right now, I would say. So not too much action there, but we should focus on the implied open as far as India is concerned. And that is astonishing, 91 points up on the Nifty implied open. So you're set for a strong move. Are you going to see IT rallying massively again? Maybe, maybe not. I mean, HCL Tech was okay, slightly better than expectation, but not the same, I would say, gusto with which TCS has been greeted. So that's one to watch. Fund flows is something that I want to quickly pull up, because all of that enthusiasm which you saw on Friday's close, a lot of it coming in from FIIs. FIIs were buyers. 4,000 odd crore rupees of volumes came in from FIIs. On the positive side, DIIs were selling. 1652 crores came in from sales from DIIs. So all in all, Samina, I would say that to expect IT to take it forward once again would be perhaps pushing it a bit, a little overtly optimistic, one would think.
It's been 6 weeks. They've been carrying the mantle. Who's to tell whether that continues or not into this week of trade? But those numbers from HCL Tech, like Tamanna said, were largely in line with expectations. They've talked about the fact that they expect a recovery going into next quarter. But let's not forget, financials continue to be a weak point, and that is not expected to see a recovery for HCL Tech for further out in the year. Apart from that, a quick trade setup this morning. If you're looking at how the week looks, it's going to be a very critical week for the markets. The Nifty has eked out very smart gains for 6 weeks. We've taken all the bad news in our stride and, of course, gained on the positive news front. It's been about sector rotation largely, with the last 3 to 4 weeks being about banks. The last week, 10 days, largely became about IT stocks. But let's take you through what lies ahead as we gear up for trade. Asian markets this morning, like Tamanna said, are trading lower. You've got important data point coming out of China this morning, which is going to be that second quarter GDP data. Now, why is that important? That will give you direction for what happens to metal stocks all over the world. Depending on the performance of metals, you will expect the same happening to ferrous and non-ferrous stocks back in India as well. We are in the thick of the earnings season. Of course, you had HCL Tech that reported. You have a bunch of other companies that start reporting earnings today. But let's not forget, good earnings from TCS, a better than expected monsoon, and hopes of a rate cut from the Fed is what's keeping markets trading with a positive bias. About 190 companies report their earnings this week, which is about 36% of the Nifty 50. So it's an earnings-heavy week, and 36% of the Nifty 50 companies will be reporting numbers in this week. You've got WPI inflation that's expected later on today, so watch out for that one. On the global front, ECB's policy meet is scheduled on the 18th of July. You've also got the Fed chief who will be addressing a conference, and where traders are expecting a 94% rate cut. So any commentary on that front will also be important too.
You mean 94% traders
bet for a rate cut in September.
Okay.
So we've moved all the way from 70% to 94% now. So it'd be interesting to see how that plays out. Metals, like I said, will be important. They will be on the radar on back of Chinese data that comes out later on in the day. Retail sales, job data in the US, inflation in Europe, Japan, and the UK are some of the other factors that will keep our markets on the edge. In the primary market, you've got Sanstar that opens for an IPO. So if that's what you're watching out for, the primary market action, because it's largely been a focus point for the last couple of months now. July 19th is when the subscription opens. So that's of interest to you. Watch out for that too. On the technical data front, 25,000 remains an important level of resistance. That's where you've seen maximum call OI addition on the upside. On the downside, max put OI has been seen at levels of 24,000. We very sweetly gained 186 points on Friday to close just slightly about 24,500. So that becomes, again, important for technical traders in terms of what bets they'd be placing. Immediate resistance is 24,700 and immediate support is 24,400. So this week's trading range is largely going to be between 24,400 and 24,700 Tamanna in session. But from the look of it, we look like we're going to open with a positive bias. But Asia is trading flat, so we will take that in our stride, and there could be a possibility that you get a gap up and then start selling off in the second half of trade. Absolutely. Unless, of course, Europe gives you a strong handover.
You know, it's going to be, I think, very news specific in the run-up to the week ahead of the budget. One would figure that a lot of policy moves will come in. A lot of expectations are going to start getting factored in. So don't be surprised if once again you see enthusiasm in spaces like defense, railways, fertilizers, etc. The consumption space also want to watch out for. Widely expected that the budget will have very, very clear moves to boost consumption, and that's one we have to watch out for. But the focus, meanwhile, on numbers that have come over the weekend, and quite a few. Let me start with the Avenue supermarkets, supermarts. Obviously, HCL Tech was a big one. Samina spoke about it. We'll have more detailed, in-depth coverage on it. You'll hear from the management, but let me start with Avenue and what happened over there. So now net profit was up 17.5% for Avenue at 774 crores versus 659 crores. Revenue up 18.6% at 14,069 crores. EBITDA up 18%. Margins at 8.7% were completely flat. So basically their operational expenses have really eaten into margins and the revenues which came in. 6 more stores opened this quarter, so that's a positive. This is Nuvama's view. They've maintained a hold and revised their target price of 5,091 versus 4,821 earlier. So not a huge upside, just about 3% odd. They're, of course, factoring in the 45 stores which are expected in FY25, and see the earnings show an unchanged PE of 75 times PE. So valuations always steep with Avenue, and that continues definitely. Store productivity remains below pre-COVID average. I thought this was one negative that the street will not take too kindly to for a company that is so richly valued. They have sustained improving trajectory of GM&A. That's good. Slight improvement in store productivity as well, and growth is also stable. So Avenue Supermarket, one to look at right off the bat, may see some negative trade because the numbers in terms of growth per store is still below pre-COVID levels. RVNL is the other one that I wanted to talk about. I mean, this is one sort of train ride which does not stop. It has had an amazing run-up, and look at that in the last 3 months, the kind of run-up, even in the last week, the kind of run-up it's had is astonishing. It took a bit of a breather in Friday's trade. So there is a news point here. They've received an LOA from the Central Railways for about 133 crore rupees. The contract is for modification, upgradation of existing electric traction systems, and it will be executed in 24 months. Now, in the big picture, it's not a massive contract which is going to move the needle for RVNL. But remember, for an RVNL and for a clutch of rail stocks, a RailTel, IRCON, IRFC, it's all been about a sentimental boost. And that's what we really need to see. Are you going to see this continuing specifically in this week? So I would put RVNL on my radar. Suntech Realty is the other one. Business updates have been coming in, and business updates have not been received with a lot of optimism on the street so far as real estate specifically goes. So Suntech Realty in that lot. Pre-sales have come in at 502 crores, up 30% year on year, so healthy figure there. Collections are up 19% year on year. So let's see if Suntech Realty also sees a boost because of this. These are a few on my list, but so many more today, Samina. A lot of focus on results, isn't it?
Yes, and I think the stock of the day will be Irida, is what my bets are. The stock has had a dream run. It's up 60% in 1 month. Remember, it went public in November last year at 32 rupees a piece. The stock trades 771% higher from its listing price at 284. It went up flat in terms of trade is what we saw, but the last 12 months, like you can see, the results are phenomenal, to say the least. Now, what is driving Irida is, again, a very good set of earnings. So the company posted earnings that had a clear beat to street expectations. Revenues were up 32%, coming at 1,511 crores versus 1,143 crores. You've also seen profitability improve significantly. They are doing pretty well in the banking and financial space. So what we are expecting is that the counter will get a thumbs up when it opens up for trade this morning. You also want to keep in mind that the last few weeks have been all about a budget play. Expectation is that there could be announcements under the PLI scheme where Irida could be a key beneficiary. On back of that, the stock has been a trader favorite. Now, of course, with very solid earnings coming their way, a further upside is what traders and analysts are betting on. I think the consensus target is about 350 rupees on Irida in the near term. Well, apart from that, smaller companies, but definitely worth a mention. We'll keep it with earnings and then go into other news flow that some of these stocks will be tracking. Is 5 Paisa Capital. Net profits have jumped 39% to come in at 20 crores versus 14.5. Revenue has also grown 21% at 102 crores versus 84 crores. The stock had a flat day before we went into the weekend, but these are again good numbers. So ahead of numbers, it went in flat, least limited expectations, but you could see an up move in today's day of trade. Bansali Engineering Polymers. Net profits have increased 5.6% to come in at 53 crores. Revenues have climbed 15.5% at 340. EBITDA has risen about 8.9% to come in at 61.6. Margins, though, have contracted at about 18.1 versus 19.2. The stock was down 5% ahead of its numbers on Friday. One quick one before I hand it over to Tamanna for some more earnings is GeoG Financial Services. Net profits were up a whopping 107% at 45 crores versus 22 crores. So this one could again be a big move with Irida in early trade. Revenues have also jumped significantly, up 56% to come in at 181 versus 116 crores. So all in all, I think 3 good earnings, 2 slightly flat is what I have so far, but it is going to be a busy day, I guess.
Yeah, no, absolutely. Three good earnings. Avenue, I would count in the slightly flat to negative one. I mean, Citi has a 28% downside on the target price on it. So that's maybe one that's going to be in trouble. Just a couple of more I wanted to mention very quickly before we get into a deeper dive on HCL Tech, the big story this morning. One is Zomato. They have hiked platform fees in select markets, that's Bangalore and Delhi, from 5 rupees to 6 rupees per order. Remember, the medium-term outlook is that these platform fees will go up as high as 8 to 10 rupees per order, and that's going to be important because that's really the driver for profitability. So that could be a positive for Zomato. Zentek, I thought, was the other one because we've talked about defense play, etc. They've introduced AI-powered robots and unveiled 4 products for the global defense market. I mean, great to have them on and actually ask them about this. This seems very futuristic. So those are a couple we could look at. And of course, a lot more that we'll get into, but let me bring in...
One second, I've got a couple more to just add to the list. Zen, in fact, has had a dream run.
Yeah.
It's one of the top performing defense counters in the last few weeks. But we talked about railways and why that has been such an exciting space recently. Just a quick update, and this is the kind of demand that is still available for railway companies. Jupiter Wagon completed their QIP. They've raised about 800 crores, but the QIP was subscribed to the tune of 2,800 crores, which is 3.5 times the size of the QIP. So that is the kind of appetite some of these QIPs have, and if it's a railway QIP, you know it's getting lapped up. The other one in the defense space is Apollo Microsystems. We'll talk to the management later today, but they've received a Make-2 project from the Indian Army. This project's value size we still don't know. We'll get a better understanding when we talk to them later on in the day. But the project involves the procurement of a vehicle-mounted counter-swarm drone system under the Make-2 category of DAP 2020. That sounds technical, but it's good news. The stock will be one to watch out for. We'll get a sense of the timelines, the size of the order win when we connect with the management later on in the day. But up until then, those are the few you want to watch. GE T&D usually moves on order wins. They've bagged an order to the tune of 490 crores. Now that's massive from Power Grid. So those are going to be a few other names that are outside the earnings season that will be seeing movement. But it is IT, and IT has been a stalwart in the last couple of weeks, and Sajid joins in with more on that. Sajid, a few weeks ago we were, I guess the rally started with expectations of a rate cut from the US. Tech is probably one play that moves if inflation looks good or bad, or if Fed decides to move on rates. Earnings so far, I mean, we've seen TCS, we've seen HCL Tech. What do you make of it? Have we gone in with low expectations and hence the outperformance? Or are those numbers actually looking promising? Or maybe neither. They still look disappointing.
I think it's the first one which you said. We're going with very low expectations from IT, and that's what is creating this outperformance coming in here. Look at some of the IT funds which have been outperforming in the last year to date or 1 year or 3 year period. They've been outperforming the index as a Nifty and Sensex, both the key benchmark indices there. But more importantly, what is coming through is that many of the companies are maintaining growth guidance and margins guidance, and that's what I think is giving this confidence to the street on IT. We saw that happening on Friday, where all the IT index was up 4.5% and TCS up nearly 6.5%, Infosys 3% and 4% each. But if you look at, interestingly, the delivery that came in on these stocks on Friday, nearly 44% total delivery for that entire basket, which is there. So 7,000 odd crores of delivery happened. Buying happened for these IT companies. Of the total turnover for both exchanges was around 16,000 odd crores, and we saw nearly over 7,000 crores of delivery. So that shows that there was a genuine buying from the institutions were earlier underweight on IT, and they may have missed out a bit of the rally that IT brought in the last one quarter. In the last 3 months, we've seen IT companies rallying as well. So, they missed out on that, and I think they're now shoring it up. So make sure that, if there is a movement forward, then, they can cash.
It's interesting you say that, Sujit, because last quarter, which was the fourth quarter, HCL, Infosys, Wipro, TCS, post earnings, declined 6% on the day of reporting. We've gone 360 from where we were a quarter ago, and business hasn't improved significantly. So that reality still remains, because I believe HCL Tech has said that while there is a recovery, it's still further out in the calendar year.
So look at what TCS has said. They can't call out growth till the end of this financial year. HCL has said the similar thing, but HCL has maintained the revenue and margin guidance of 18 to 19%, which is there. In both the cases, we have seen TCVs at a lower level. It may be within the band which they have been talking about, but it's lower. In HCL Tech, on a quarter-to-quarter basis, the TCV is down. Net TCV additions are down 14% to $1.96 billion. Now, despite that, there is a buoyancy saying that, okay, they will be able to pick it up. Q1 traditionally been weak on margins for many of the IT companies because of the salary hikes which comes in. And the street is saying that they will be able to plow back those things going forward. So it is more of a bet which has been, which they have been taking. I don't think the rate cut thing scenario is yet to play out. Of course, if it plays out, then it's a run for them.
And if you have Trump, it's a bigger run.
It's a run.
So specifically on HCL Tech, one thing that caught my eye from the management commentary, Sajith, is management talking about how more than Gen AI, it is competition which is driving order wins, and they're losing out on order wins because of competition and competitive pricing, to be specific. Now that seems to be something which HCL Tech is facing very specifically and weighing down. Since we have TCS so far and HCL Tech now following on, is it fair to say that HCL Tech is definitely not showing the kind of positive outlook that TCS was? And we might see that today.
Two things are here at play. If you look at TCS, their maximum revenues come from North America and BFSI. For HCL Tech, it's R&D and manufacturing, which is the core revenue generators for them. So you cannot compare what is happening. But yes, what is important is that ER&D revenues have fallen in this quarter, and that's a cause of worry, because if they are saying that pricing is a reason and competition has been it's a hyper competitive pricing which is coming in, then it's a big problem, because ER&D used to get huge higher margins for companies, and that's now going to get impacted, and you're going to see that across the board, across the companies who are doing ER&D, engineering, R&D services, providing services. So that's something which is important to note. It would be, many of these companies would be now reacting to the kind of commentary which HCL Tech is making on ER&D, because this space has now got attention of many of the players, because the traditional verticals were not giving them enough margin, and ER&D was providing the high margin business. So now that's coming under pressure for them in that sense.
Just one quick one, because I know you look at stuff like this. For most sectors, I think we borrowed returns from the future, from the way we look at some of these stocks that have gone up significantly. 2 months ago, IT looked like a great value buy. Does it still remain? Does that story still stand? Is the valuation still compelling when you look at some of these P's?
If you look at the outperformance of some of the IT-specific funds from year to date, 1 year and 3 years, they've been significant outperformers compared to the benchmark. So yes, you can say that you're buying into that outperformance, but the question is that is there a leg to this rally which is there, and we are talking about 3 to 4 quarters ahead.
And looking at the cash buy numbers, it seems like that could be the belief of the market.
Yeah, that's the thing, because most of the funds are underweight on IT for last 6 quarters. Now they're trying to shore it up to a level which does not, where they're not behind the curve in that sense.
It's a catch up.
Yeah.
We heard, of course, from HCL Tech's management over the weekend and on Friday evening, actually, after the earnings. Remember, you will be seeing a conversation with them up ahead on the show as well. But listen in to what the management said on the way ahead for the company.
I am pleased to share that we've clocked an industry-leading growth, year-on-year growth of 5.6% in constant currency. As we've stated in the past, seasonally, Q1 is a soft quarter for HCL Tech. So sequentially, our revenue declined 1.6% in constant currency. And this is better than what we had expected in the beginning of the quarter. Our operating margins were in line with our expectations. It came in at 17.1%, which is a 13 basis points increase on a year-on-year basis. Our services business grew 5.8% year-on-year in constant currency and declined 1.9% sequentially. Our engineering and R&D services business grew 8.4% year-on-year, but declined 3.5% sequentially in constant currency. These declines were mainly due to ramp downs in manufacturing and the medtech vertical. Our software business had a good 3.5% year-on-year growth in constant currency. On the people metrics, our headcount at the end of the quarter was 219,401, a reduction of 3.6% from a quarter-on-quarter perspective. But a very large part of this reduction is attributed to the State Street joint venture exit that we had announced earlier in the quarter. On an LTM basis, that is last 12-month basis, our IT services voluntary attrition stands at 12.8%, amongst the lowest in the industry. Coming to the geographies and the verticals, geographies on a year-on-year basis, Americas grew 8%, Europe grew 3%, and the rest of the world business declined at 3.6% in constant currency. In our verticals, on a year-on-year basis, telecom and media and retail and CPG fared well, growing at 69.2% and 9.7% respectively. Manufacturing grew 3.5% year-on-year in constant currency, and it declined on a sequential basis. Life sciences and healthcare declined 4.1% year-on-year in constant currency, primarily because of completion of projects that happened last year, and also some softness that we saw in the medtech industry segment. Within Gen AI space, we continue to witness a lot of traction on AI and Gen AI related opportunities. After launching HCL Tech AI Force, a generative AI and automation platform a couple of months ago, we've launched another offering called HCL Tech Enterprise AI Foundry to simplify and scale enterprise AI journeys. We have multiple ongoing engagements where we are working with clients to deliver real value, like for a global technology major who selected us to implement a Gen AI-based solution for gaming review analysis, including the automation of data collection, sentiment analysis, and the operational automation, resulting in significant workload reduction. They also selected us to deploy Gen AI to transform their content lifecycle management and the processes. During the last quarter, HCL Tech has been ranked in the Business World's India's Most Respected Companies 2024 list at number 7. We're very happy to note that, and we're happy to announce that today. And we were also named as the most honored company in India in the annual Asia Executive Teams Survey by the Institutional Investor Research. HCL Tech ranked number 1 in 21 categories in the technology, IT services, and software sector, and had a total of 27 top 3 rankings across Asia ex-Japan and rest of Asia ex-mainland China survey tracks. I would like to thank all the investment analysts and investors for their acknowledgement of our good work. Now, looking ahead with Q1 performance in line with our expectations, we expect to grow in Q2 with all verticals and geographies seeing a sequential growth except financial services. As you know, we shall have the planned impact of State Street divestiture on our revenue in Q2, and including that impact, we remain comfortable with our full year revenue and margin guidance as clients spend on Gen AI and other emerging technologies are seeing some traction.
Well, that's the management of HCL Tech talking about the quarter that's gone by and what lies ahead for the company. The more detailed chat will be at 9:30 a.m., so catch that on the channel. We'll take a break. We'll come back. We'll talk about F&O and the setup for the options trading market this morning. Welcome back. You're watching India Market Open. Implied Nifty is indicating to a solid start this morning, despite the fact that Asian markets aren't doing too well in early trade. Fundamentally, there'll be lots to watch out for, but technically as well, the markets are looking like they're in a good sort of buy zone. Positive bias with a little bit of consolidation is what we are factoring in for as we gear up for trade. But let's take you through all the action that we have in the options market. Remember, 25,000 has been an important level that we're watching out for on the upside, but that's the picture that we're getting in. The Nifty 50 June futures trade at a premium, and there's an increase in open interest as well, very clearly indicating that the bias on the street continues to remain positive. Bank Nifty, if I can do a quick check on that, that was a little wobbly over the last couple of weeks after that outperformance that we saw in the first half or in the later part of June. Bank Nifty is trading at a premium, but there's been a decline in open interest. So clearly an opposite sort of trend that we're seeing as compared to what the Nifty 50 is indicating to. In terms of the open interest distribution this morning, 25,000, I mean, look at that. The max call OI continues to remain at this level. We've seen that consistently over the last couple of weeks, but that only gets further higher and more as new highs get taken out and the markets get closer to those levels. So 25,000 is a key level of resistance that the markets will be facing in the near term. We have eked our sharp gains in last week's trade, so this becomes an important resistance for the market. That, of course, is followed by 24,900, where we've also seen max have quite a heavy addition of calls at those levels, followed by 24,700. On the support side, 24,400 is where we've seen maximum put OI, indicating that the markets will be using this as a short-term support in terms of this trading week. That followed by 24,300. In terms of a broader range, on the downside you have 24,000, and on the upside the markets will remain resisted at levels of 25,000 in terms of trade. So that's what we have in terms of open interest distribution in trade. In terms of stocks, we had stocks like Atul, IndiaMart, Dalmia Bharat, L&T Tech, Manappuram Finance that saw an increase in long built up. You also had stocks that saw heavy shorting taking place. So Birlasoft, Glen Pharma, Balrampur, Petronet and Coforge are short covering, while the other ones have seen long unwinding take place. So that is largely what the setup looks like this morning. Amar Singh Dio joins in now with his top trades. Amar, good morning. Thank you for joining us. Amar, it's been a solid last 6 weeks of trade. 25,000 is where we've seen maximum call OI. On the support side, 24,400 becomes crucial. As we go into this trading week, what's the option strategy on the Nifty?
Yeah, I would say that if you look at Nifty, we've been on the buying side primarily because if you look at the way Nifty has been behaving vis-a-vis Bank Nifty, the Nifty's got a lot of support coming in from the IT space. So that has really helped Nifty, and Nifty has outperformed Bank Nifty. So we've been on the long side in Nifty. So any correction in Nifty is a buying opportunity. The levels to watch out for on the downside. So 24,000, 24,400. That's a level where Nifty, if it breaches intraday, that could be a buying level. So a call option of that ATM, so 24,400 could be looked at. Because the trend, what we are seeing is the intermediate term trend has really picked up steam. So that's, and the long term trend definitely is positive. Short term, we are seeing some sort of consolidation, but the trend is still in favor of the bulls. And also what we've seen in the OI data in terms of the open interest data, that is overall positive. But this week we've got some important heavyweight results, so we have to keep that in mind, Reliance and HDFC Bank.
You're right, 36% of the Nifty 50 Amar reports earnings this week. So it is going to be very, very specific in terms of stock-specific action. And of course, then we go into budget next week. But on Bank Nifty, we've seen towards the end of June, it had a pretty good run. But from the start of July, Bank Nifty has been struggling at higher levels. How would you trade Bank Nifty after what we saw over the last few days?
See, Bank Nifty is more or less displaying some sort of divergent trends. Because in Bank Nifty, we see on one side HDFC Bank continues to weigh heavy there. Then we've got some other banks, ICICI, then Kotak, SBI, Axis, IndusInd. They've got their own trends. So I would say that Bank Nifty on the daily charts is clearly pointing towards consolidation, but still I would give the favor in terms of the bulls. So Bank Nifty, on the Bank Nifty, any pullback towards 51,700, 800. So a 400, 500 point correction in Bank Nifty is where one could look at a buying opportunity, because that's a level of crucial support for it. On the upside, immediate level of resistance is somewhere around 52,600, 700. So if one is looking at buying call options, so wait for a correction, that can be a very good buying opportunity. You can expect a sharp pullback from those levels, not at the current levels.
Right. Also, stock-specific trades, you have anything that you're recommending in terms of trading activity today?
Yeah, one can look at Manappuram Finance is one. It's very strong. If you ask me, technically it's very strong on the charts, and also it has been displaying very strong momentum. And the important level for it is the current level, because if we go back in time and look at the stock in I would say December quarter of 2021, it had made a high of 224. Currently, it's trading around that level. The last few days have been exceptionally high in terms of average volume. So, and the intermediate term trend has picked steam. So this is one stock one can look at. There's long built up also happening. So Manappuram Finance, one can look at a call option, a July call option, 230, a strike at the current price with a stop loss of 1.3 and a target of 14. Or one can also look at the July futures. And the second stock to look at is from the pharma space, and that is Dr. Reddy's. Dr. Reddy's has also taken out a major zone of resistance. It was unable to earlier breach the 6,400 level, so that has been taken out. Currently, it's around 66, 35, 40 range. The trend remains strong and positive, so one can look at, I would say, Dr. Reddy's July futures at the current level, or any pullback towards 6,600 levels with the stop loss below 6,400 and a target of 69.80 on the upside.
Right. Thanks, Amar. Those were trading strategies coming from Amar Singh Dio. But like he said, it's going to be an important week. 36% of the Nifty reports earnings. So you will see a lot of volatile trade play out this week. But Dr. Reddy's and Manappuram Finance are his two top trades for the week. Well, on that note, Tamanna, it's back to you.
Yeah. Let's start with our conversation with Soni Patnaik, AVP at JM Financial Services. Very good morning to you, Soni. You know, it's the start of an exciting week, also a truncated week because you have the markets shut on Wednesday because of Muharram, and you have the Nifty at all-time highs. What would be your strategy on the Nifty and the Bank Nifty this week?
Hi, good morning, Tamanna. Thank you for having me on the show. I think Nifty, of course, we can see the levels it tested of 24,150 odd levels from where we saw a good recovery happening towards 24,500. The weekly closing last week was above 24,400, which was the earlier resistance. So right now we can see that this momentum may continue. Even today's GIFT Nifty indicating 80 to 90 plus points of implied open. It is indicating that somewhere around 24,550, 24,600 could be the level once that Nifty test. There are no signs of exhaustion or profit booking just yet. Last week, of course, there were few parameters where Nifty had gone overbought. We saw a cool off happening, but again, after the cool off, the recovery has also taken place simultaneously. It's not wise to enter a Nifty or Bank Nifty strategy on the long side at current levels. Wait for a dip, maybe around 24,400, 24,350. If that dip is available, then it's just wise to reinitiate the longs in those range. Right now, just wait, and if somebody is already holding on to the long positions, it may be wise to take the profits once a gap up happens today and just take the profits and stay light when it comes to indices. Even now, it is better to adopt a stock-specific strategy instead of an indices strategy, as we can see it in a continuous uptrend. So I think it's just wise to stick to stock-specific where there are good breakout with good data, and that's the level to follow for.
What is what are your top picks this morning, Soni?
So the first would be from the IT space, Wipro. On Friday, we've seen a fresh breakout happening on charts. It's a good breakout. There's a very strong support, even around 530, 540 range. Multiple support, aggressive put writing has taken place. So one can enter Wipro at current levels, and on any small dip towards 540 also can be a very good range to initiate the longs. Keep your support stop loss of 540 and a target of 580 can be seen. Any sustenance above 580, it can also head towards 600, 610 levels. I think it's a very good risk reward ratio, quite favorable, and the breakout has come with good fresh long built up positions. You've seen very strong volumes as well. So I think the first pick is going to be Wipro. The second pick is going to be Jubilant Food. Now here, Jubilant Food, I'm preempting that the breakout will happen above 590 or so. And, the once you see that breakout, it can head towards 600, 620 levels as well. Jubilant Food has been consolidating in a very small range between 575 to 580, 85 on a higher side. And there's a very strong support of 565. So I think keeping a very small stop loss of 565, one can enter Jubilant Food, and a target of 600 initially can be seen. If it's able to sustain above 600, you can see it extending the targets towards 620 as well.
Wow, that's two aggressive buy calls coming in. Soni says, avoid the index, go with stock-specific trades. Kush, good morning. Thanks for joining in. What is your strategy on the index? The move on Friday was smart, to say the least. 186 points higher. We finally closed the day at 24,500. As we go in this week, it's going to be an earnings-heavy week. The week after is going to be budgets. It's also a holiday truncated week. Keeping all that in mind, but the fact that we've gained for the last 6 trading weeks, would you consider a long trade on the index at 24,500?
Hi, Samina. First, very good morning to you. Hi, Soni. Well, as I've said before, short is not a trade that is playing out well in this market, right? So despite having that, overstretched feeling, despite having this, inkling that, perhaps the market would want to correct a little bit, the markets don't seem to be telling us that. So till the time that happens, I think it's best now to just play, this market on the long side. Also, what is encouraging, to add to the fact that, the markets are moving higher is the fact that you've seen the support bases being respected in the case of Bank Nifty at least, and in case of Nifty, those support bases moving higher. Earlier, 24,400 was a bit of a resistance. Now, if you see, 24,400 has a stellar put base. 24,500 also seems to be adding, some OI on the put side. So, which means the base is perhaps shifting. I think we're looking at the next level of 24,650 from a very near term perspective on the upside. So any kind of dip that you now get towards 24,400, 24,300 zone should actually be taken as a buying opportunity to go long for targets of 24,650. Bank Nifty, as I've maintained that while there have been lower high formations except for Friday, what's encouraging is that within the banking setup itself, if you see the intraday moves have actually been on the positive side for the most part. So till the time 51,850 to 200, the same levels that I've mentioned last week as well. As long as these levels are maintained, you could remain long in Bank Nifty, consider intraday opportunities, to go long on Bank Nifty. From a positional standpoint, 52,800 and 53,300 are the levels that we're looking at on Bank Nifty. So right now, bias is positive on both of them. Any minor dips should be taken as a buying opportunity.
Kush, what about your top trade recommendations? Any trading calls this morning?
Sure. A couple of them. First one is Grasim. After a brief round of consolidation, the stock actually started to move up. Wednesday, Thursday, Friday, 3 sessions. We saw the stock actually moving higher. Now, from a near-term perspective, I think 2,900 is a good level. But if you take a positional standpoint, then 3,060 is the target to look at. 2,770 is where you place your stop loss. Also, Rallis seems to be completing a formation where the resistance zone of 340, 345 is taken out, closed just above that. Friday we saw a stellar move, but then again, during the close we saw a bit of a profit booking. But I think this momentum could continue. From again a near-term perspective, 353, 359 are the targets to look at. 339 is where you place your stop loss.
Okay. All right. Another space that will be on radar today is pharma stocks. A slew of them will be in focus. Varsha joins us to tell us why. A lot of FDA observations coming in. Varsha, some positive, some negative.
Yes, Tamanna. So as you rightly said, US FDA had conducted inspection for many of the pharma companies that would be in focus today, starting with Lupin, wherein they have received EIR, that is Establishment Inspection Report, for its Dabhasa facility, and inspection concluded with no observation. Now, facility has received no action indicated classification, meaning there were no objectionable conditions found during the inspection, and this facility is engaged in the development and manufacturing of APIs, that is active pharma ingredient and CDMO. Wherein if you see for Cipla, their Kurkum facility has gotten voluntary action indicated classification. Now this is the second best classification that a plant can get from US FDA. This means that there were objectionable conditions or practices which were found during the inspection, but the authorities do not need to take any measures, and all the measures will be taken by a company on voluntary basis. While for Piramal Pharma, if you see, their Ahmedabad facility closed with zero observation, but for Suven Pharma, their Hyderabad facility, wherein US FDA conducted inspection, they have issued Form 483 with 2 observation. Now, Form 483 is a notice that highlights potential regulatory problems. Now, these were all for US FDAs. Next, we have Alembic Pharma, wherein they have received tentative approval for a drug which is used for the treatment of pulmonary arterial hypertension, and the estimated sales in US as of October 1st, 2023 was almost $978 million. Lastly, we have Aurobindo Pharma, wherein there's going to be a board meeting on 18 July where they're going to consider buyback, and this will be the first buyback that the company will be conducting.
Okay, so a whole slew of pharma stocks that will be in focus. We'll see. That's not a space that has been moving too much last few sessions. So you might see individual stocks move, reacting to news. But what is the space to watch out for? Is it going to be IT once again? Chakri Lokpriya is joining us, managing partner at Red Strawberry this morning. Chakri, very good morning to you. Do you expect the dream run in IT stocks to continue post HCL Tech? Do you think enough momentum coming in from those numbers?
You're right. It's a good thing that HCL Tech maintained guidance, and therefore, it takes away some of the uncertainty. And also, it's very nicely timed with now the expectation that the Fed might actually start cutting rates in September. I think so. So a catalyst that is needed for the IT sector is a thawing of the order book, conversion into revenue. Valuations are okay, so I think they're all good for a trade at 10-15% trade in evaluation terms, but nothing spectacular beyond that.
You're right, nothing spectacular beyond that. It met street expectation at best. Let's talk about the IT index, Kush. 4.5% rally, but that was also followed up by media, which saw quite a bit of activity in trade. So those were the two sectors that were the standout sectors in trade on Friday. As we go into this week, any long strategies on the indexes? Bank Nifty, real estate, IT, I'll throw it in for you.
Well, amongst the names, I think, Bank Nifty is something that I'm a little constructive on. As I said, the index has taken support at the 20-day moving average for, a couple of sessions now. For me, the 51,800, 52,200 base is intact for a while. And what's also heartening is the fact that, HDFC Bank, while it was decelerating its descent, has perhaps starting to consolidate. Maybe too early to say that, but it's at least showing signs of consolidation. Now, if that were the case, then the likes of, ICICI, Axis, perhaps even a Kotak will start, picking up some slack. SBI is also close to resistance levels. So some of the components are actually doing well. As I said, if HDFC Bank just falls its fall, then I think, we could perhaps see a big up move towards, let's say, as I said, the 53,300 mark on the Bank Nifty. So if one were to consider a trade, the risk-reward ratio here is extremely favorable. So with a stop loss of 51,800, Bank Nifty is a long trade to consider.
Okay, so Bank Nifty is the long trade. Good morning, Kush. What about your IT lot, HCL Tech? Let's talk about Wipro. Wipro is one of Sony's top calls as well, and TCS. How would you see three of these today?
Hi, Tamanna. Well, did it not seem like a delayed reaction to the TCS numbers? I mean, for the first hour or so of the trade, the markets didn't really react to them at all.
True.
And then suddenly, market found a pocket to latch onto and, just move higher. Yeah. That's how, I think the IT pack is going to move. I agree to what, Chakri just said, that, these at the moment are perhaps, a good trading bet. That said, I will, concede to the fact that technically some of these are now starting to look good, where an HCL Tech, has broken above the last week's resistance of 1530, 1540. So perhaps that's a stock that you want to consider. My picks in this space will remain, a persistent system and a KPIT Tech. Now, even Wipro, for that matter, has actually done well. It's breaking out, so the momentum's strong with that. I wouldn't suggest a fresh position just here, but if you've got an existing position, I think you can ride it all the way up till 580, 585 kind of levels. So, but for a fresh trade, you should consider persistent systems and a KPIT Tech.
What about a Coforge? Coforge was the winner last week, or last Friday at least, rallied about 7.5%.
So definitely more traction in the mid-cap names, and the kind of recovery that Coforge has seen from the 200-day moving average. It's still not, touched the highs of, those 6,800, 6,900 levels that it had made, a little earlier. So I think this one still has a lot of room. A lot of other names that we've already discussed are actually close to their highs or making fresh ones. So I think, if you want to take a positional bet, then perhaps, you should consider a Coforge. 5650, that's your positional stop loss. And as I said, on the upside, you're looking at a 6,400 and then a 6,800. But remember, this is a positional, these are positional levels.
All right. Another stock to look at and watch out for this morning is Avenue. Chakri, let me come to you on your view over here. I would say that top line looked okay and better than expectations. Margins completely flat, and a lot of that recovery and growth eaten up by operational expenses. Same store growth still at pre-COVID levels. Would you see that as a bit of a negative as far as Avenue is concerned?
Avenue has been trying to, address this for quite some time now. And the fact that, the numbers are still at pre-COVID levels is bearing on the stock, given its valuations is still not particularly cheap. And that, there are no signs, rather little signs that the same store growth will improve in the coming quarters. So the expectation that, whenever consumer spending, etc., starts picking up, will kind of rub off on Avenue is kind of one expectation. But until that, company specific, I'd still stay away.
Okay, so you would stay away from an Avenue. Sony, what about you? Is this a stock that you're tracking?
Tamanna, if I look on in the charts, the stock has seen good volumes in the last 2 days, and there was a good of a range breakout above 4850, 4900 range. The stock can continue to head towards its previous, highs of 5100, 5200 range. So I think that's the level one can look for a profit booking in case that happens. And from current level, there's a good support of, on immediate basis, we can see there's a good support of 4780. So as long as 4780 is getting defended, the stock can certainly head higher towards 5100, 5150.
Okay, 5150. You can see on an avenue, possibly says Sony. So she's a little more bullish on that stock, at least on the charts. We'll take a very short break, but we're coming right back for the pre-open. Before we get into the break, quick look at the implied open. And, we're looking like we're set for a good Monday morning, a positive start on the Nifty, an 88, 89 point, implied open on the Nifty. We'll look at what the pre-open rates are when we come right back. Stay tuned.
back. You're watching India Market Open, and it promises to be an exciting Monday morning. Lots of earnings that the markets will be tracking and reacting to. Implied Open, interestingly, still indicating to a strong start in trade, despite the fact that Asian cues are fairly negative. Well, it's the bond markets that may hopefully see some action this morning as well. They've been quiet, despite the fact that we got it added on the JPM index, but versus what expectation was, the yields haven't reacted too much in either direction. Mahendra Kumar Jaju, CIO, Fixed Income and Marai Asset Investment Managers, joins in. Hi, Mahendra. Thanks for joining in. Mahendra, I'll start with data that came in on Friday. Higher inflation with a higher IIP. Do you feel like the RBI will be in no hurry to lower rates, even though the Fed may do so in September?
Well, I think it is the stated...
Mahendra, I can't hear you. I think you're on mute.
No, I can hear him.
Okay.
I think your audio is...
Okay, I can't hear
Go ahead, Mahendra.
Okay, so I think I was saying that, it is the stated stance of the Reserve Bank that there is no rate cut on the horizon right now. In the last week, the Reserve Bank governor mentioned something to that effect in an interview again. So, given the fact that the inflation is a little bit higher than what the market was expecting, given that there is no urgency for the Reserve Bank to act in the support of growth, at this point, it would seem that there is no rate cut on the horizon. Over the weekend, I read multiple reports from different analysts where they are pushing back their rate cut expectations. But I would like to think that the macro for India is very, very strong. And Fed is now expected to cut rates beginning September. And I would like to think that when the Fed starts cutting rates, RBI will possibly be, cutting rates again in the last quarter of the year. So as the things go forward, I would expect the Reserve Bank to also get into the rate cutting act.
Rate cut in Jan. So now we've gone out to calendar year 2025. How important, Mahendra, do you think the budget is going to be to decide the direction of the monetary policy, you think?
So budget is going to be very, very critical for the guidance to the monetary policy on two fronts. One is on the fiscal deficit fronts. If the fiscal deficit continues to show the moderation trend that has been established after the very high fiscal deficit in the post-COVID year, and if the government continues to follow the guided path of bringing down the fiscal deficit to somewhere around 4.5% by next year, then that would be a good guidance for the Reserve Bank. And second is that over the last, after COVID, the inflation has been very well supported by the supply side measures taken by the government, because we have seen multiple instances where the weather fluctuations or the global supply chain disruption has caused the commodity prices, especially the agri-commodity prices, to flare up. And the government has taken multiple measures both on fiscal and on administrative front, like the tweaking of the export or import duty or changing the subsidy or the stock holding limits on different agri commodities, and that had been very critical in supporting the inflation at remaining at around a reasonable. So that would be the second impact that the Reserve Bank will watch for. Let me just also add that given the recent experience, I would like to again believe that on both these fronts, we are expecting a or supportive development and not a negative development. And to that extent, it should further add to the expectations of rate cuts sometimes later in the year.
Sometime later in the year for India, or do you mean January for India, Mahendra? Hi, Tamanna here. I just want to put some context into that, because if you look at the spike we've seen, and it was a slightly unexpected spike, it's because of heat wave, weather pattern disruptions, food inflation, factors which can retreat also fairly quickly.
That's true. So see, the thing is, in terms of timeline, I think as fund managers, we focus more on the direction of the way the macro environment is evolving. So as you rightly said, first of all, the inflation has largely remained range bound. In US or in other developed markets, we saw very sharp spike in inflation and then were very quick slide in the inflation. So between 22 23, the US inflation saw a range of 9 to 3%. Our inflation has largely remained between 5 to 5.5%. On occasions, it went to 7% plus also. But those were all because of the volatile, variable and cereal prices. It was not due to the core inflation. Core inflation has now come down to close to 3%. We expect it to rebound again and go back to close to 4% over the next 6 months because 3% is again a very strong directional movement. Now it's with a lag effect. So let's say 4.5% is a broader range for the core inflation, and then there will be a lot of volatility, as you mentioned, around that on the headline print because of the base effect to start with, and then due to the volatile vegetable and food prices. Now, let's say headline inflation over the next couple of months is expected to drop to somewhere close to 3% because of the base effect. We know last year there was a spike, but that's not going to influence anybody's judgment as to which way the next move will be. These fluctuations will be factored in by the market. Neither the market is too excited or is not getting very worried. So if you look at the 10-year yield range in India, it has been between 695 to 7.25%. In May 23, first time 10-year reached 7% mark. It got traded at around 695 on the back of positive developments in the global markets and in the improvement on inflation across the world. It took the 10-year another 1 year. So in May, then we saw the breach of say 7%. Again, the 10-year has been trading between 695 to 7%. And that happened after the Reserve Bank gave a bumper dividend to Government of India. The JP Morgan bond flows started happening. The inflation, core inflation particularly, has fallen to 3%. So, therefore, I don't think that we are expecting any major volatility. But I think directionally, once the Fed starts cutting, it will act as a guidance to the rest of the world central banks.
I agree, but I think all those expectations of bond yields hitting 6.5 by the start of next year may be delayed further if there is no rate cut from the RBI. And the rate differential, remember, between the Fed and India also stands at a record low. So India may remain in a situation where they may not move on rate cuts even if the US does. Thanks, Mahendra. Great talking to you this morning. That's perspective coming in on the bond markets and, of course, what does that higher IIP, high inflation data mean for bond yields? No movement, no significant big moves coming in on the 10-year. Well, the pre-open trade is on the screen. It's actually a good start from the look of it, pretty much in line with what implied Nifty was indicating too. But it could be a day where you open gap up, but finally see some profits being taken off the table on the index. Well, it will be about stock-specific action, and that is largely often driven by brokerages. Harsh is standing by with a quick list of brokerages on stocks to watch today. Harsh, I believe you've got a brokerage report on cement this morning.
Well, yes, an interesting one, Samina, from Morgan Stanley. Now, what they're seeming to suggest is going forward, the upside that you will see in cement stocks largely will be driven by, of course, the demand is expected to be strong and therefore will be driven by capacity and, cost rationalization and improvement. Which ones can sustain margins, or what will be the positive triggers with regard to margins? Those stocks will stand to benefit in an otherwise very strong environment where it comes to demand. And that's where they believe that Ultratech and Ambuja both will really stand out. There is scope and levers for further additions for both of these companies in terms of capacity additions, as well as margin expansion is set to continue for both of these, and that will likely help them stand out in this next phase, because just in terms of the way stocks have rallied, there's limited upside otherwise in terms of a re-rating for some of the cement stocks. So Ambuja Ultratech is their top pick. They've raised their bull case weights on both of these stocks. Ultratech is the topmost pick They are overweight on both of these. Just in terms of target prices, they've hiked target price for Ultratech from 11,600 to 13,620, which is roughly an 18% upside. And also on Ambuja, what they've done is they've hiked the target price from 665 to 775. Second hike in just about the last 5 trading sessions. So Ambuja, Ultratech in focus.
Ambuja, Ultratech in focus. I would say a lot of tech stocks in focus as well. Let's look at what's moving this morning. And I'm seeing quite a bit of action in your pharma space. So maybe a defensive play. Look at Aurobindo Pharma, look at RVNL, some of the stocks that we had actually flagged off for you. Just as soon, as pre-open has begun, you're seeing some of that come into play as well. Tech stocks are taking a breather, but you're back to your ONGCs of the world. HCL Tech not half bad, 1.5% on the back of those numbers. TCS, after its crazy run-up, still up in the green. So yeah, tech definitely still in flavor. Kush, anything that you're spotting which is exciting in the pre-open session, which is just about wrapped up? So you're looking like a positive start for sure for the markets.
We discussed a couple of stocks on Friday with Samina on the, in the FNO show, which was Axis Bank. So the stock actually hit, the target, and then it sort of came off. So I think that continues. We're looking at an Axis Bank from a target, with a target of 1340, 1370 also. And one another stock that we discussed was NFL, National Fertilizers Limited. Here too, I think we discussed the second target of 165. First target, I think, was about 157 odd. 162 was the high from where it came off. So I think that's also a stock to keep on your radar. I think I'll continue with, both these names. So an Axis Bank and an NFL, to be kept on the radar.
Right. Well, that's a few stocks coming in from Kush to track this morning. The other space that may see some action is going to be, once again, I know Kush, the sound of sounding very repetitive, is going to be railways and defense again. I'll keep defense out because you've got that smirk on your face. But in railways, Railtel, RVNL, today the day is going to belong to which rail counter?
Take your pick, I think. It's just like a Russian roulette right now. But no, I completely agree with you on the fact that, you can't not talk about these stocks. So while they're stretched, I think, they do have a lot of, trader interest. They still have a lot of investor interest. I think we're looking at a Railtel, a stellar move on Friday, but again, on the back of very good volumes. I think, the momentum here could, very well continue. On the upside, 625 to 640 are the levels to watch out for. From a support zone perspective, I think a 585 is the level to, keep your stop losses at. So I think Railtel perhaps, should be the stock of the day, given the kind of huge spike that we saw in the volume on Friday.
14%. So if you're a swing trader, you're buying into strength, and hence Railtel looks good this morning as well. You want to come in on this one, Soni? Anything on the high beta counters that have clearly become a street favorite for the last few months now?
I think, fairly covered well by Kush, but a certain high beta stock which is moved parallelly with Nifty and sees no major sign of profit booking is Trent. I think it's heading towards another all-time highs. There's another breakout above 57.20 expected today, and in that case, it'll give you a option chain breakout. So the stock can head higher towards 5800, 5850 for the day, provided that the resistance is crossed today. You can see very strong support continuing in the range of 5550 to 5600. So as long as the support is held and defended, the stock can head higher towards 5850.
Right. Chakri, what about you? Are you playing any of these stocks, budget trades between now and until the budget? Would you, I know it's more a tactical strategy, but would you look at adding any railway or defense stocks to your portfolio?
RVNL still looks good, for all for the valuation wise, actually, because these are all long dated orders. They have an order book of 1 lakh crores. And then, so therefore you value it on, let's say, an FY 27 or 28, then the stock looks okay. So I think long-term story is intact. RVNL is good. And fertilizers, National Fertilizer Corp, Rashtriya Chemical Fertilizers, these companies, long neglected, but, going into the budget, I think, worth definitely looking at.
You know, Chakri, since we are in that last leg of the pre-budget kind of a move, you talked about fertilizers, you talked about rail. What about affordable housing? Is that another space where you see a push? Would you take a tactical call on a Hutco, Awas, these kind of players?
You're absolutely right. Given again the whole focus of post-election, affordable housing becomes important. Hutco as a player is, clearly it has competitive advantages which others cannot replicate easily. Their cost of funds is lower. Given their status, they get access to various contracts, and therefore, their NIMs will be wider, better that is, and therefore that company still looks good. Repco and PNB Housing still look okay.
A whole lot of stocks that you want to be tracking in today's day of trade. Large cap, mid cap, that's largely where the action will be. It's going to be stock specific, and you want to keep that in mind only because the index has had a go for so long now that you will see a little bit of tiredness at high levels. But the fact remains that the buy still is positive, and this market still remains a buy on dip market. Sony, I've got 40 seconds to go, but very quickly, can you give me one quick stock in the next 10 seconds?
I think, Tamanna, I'll focus on Trent itself, which is looking quite strong for the day, and intraday also with the same 5600 stop list, one can look for a target of 5800, 5850.
That's Trent that Sony is betting on. 5800 is a target she's working with, and it's an intraday call she's making on Trent as we see it. Apart from that, the benchmark, of course, will attempt to levels of 24,700. That is where there's key resistance on the street. On the downside, it's going to be 24,400 that the markets will very closely be eyeing in trade. Bank Nifty has been lagging slightly behind. I don't expect much of a move on that either. It'd be interesting to see how the markets, whether they reward or, of course, punish HCL Tech as it reported earnings in line with what the street was expecting. The Nifty has done well in line with street expectations. The Nifty 50 has seen a gap up opening, but as I suggested, it could be a gap up and you could see selling pressure emerging in the second half of trade, but I don't even think it's waiting for the second half of trade. Well off the day's high point, it's only up about a 57-point gap up on the index is what we have. Bank Nifty lagging slightly behind, 85 to 90 point higher, so maybe it is a day when Bank Nifty starts playing catch up. It's actually not doing too badly. 100-point on Bank Nifty is what we have. Broader markets is largely where the action has been over the last couple of weeks now. Mid cap and small cap and micro cap index all outperforming the benchmark in today's trade. Well, let's quickly pull up the Nifty 50 and see how the breadth of the market is doing, what stocks are moving, what stocks aren't. So the bias is very, very clearly on the upside. You've got about 45 stocks that are gaining and a handful of stocks that are selling off in trade. While the street may have said that the numbers from HCL Tech were in line with expectations, the markets do like it. 3% higher on HCL Tech post-reporting, even though there was no clear outperformance on that quarter. Cement looks okay. Ultratech could be the Morgan Stanley report that's giving some support to Ultratech this morning. You've got all ONGC that's looking good, SPI, Maruti, so auto is looking good. IT continues to be on the lead indicators. You've also got Tech Mahindra, Infosys, TCS. After a 6% up move on trade, the stock continues to do well. On the sell side, you've got consumption that's taking a little bit of a cup this morning, and metals. So Tata Steel is subdued, even though you've got Chinese GDP data that the markets rely. Asian Paints, Hero MotoCorp in some sense, and some of those banking names, Tamanna, looking weak. But all in all, muted start, but it's impressive. HCL Tech gets a thumbs up. So if the markets want to reward you, they'll find a way to do so.
I think tech is definitely not done with its run-up, Samina, and you're seeing that coming in today very, very clearly in the opening trade as well. Be curious to see what some of those mid-cap tech stocks are also doing this morning. But let's pull up the index actually just very quickly, the Nifty IT, and see what's happening over there. Is this a broad-based sort of an enthusiastic response? And definitely 1.5%. Can we just pull up the components of the Nifty IT before we go into specific stocks that are on our radar? And look at that, HCL Tech up 4% now. But across the board, you are seeing that excitement as far as tech is concerned. Even an Emphasis, it's the second trading session in a row when Emphasis is firing for no real rhyme or reason, one would say. But HCL Tech 4% up is really the stock of the morning. All right, let's get to specific stocks in the broader market. We're talking about Avenue. Avenue Supermart numbers were decent. but you saw operational expenses eat into margins. So margins were flat. Avenue Supermarket 2.5% up. Ireda is the star. The revenues up 32%, net profit up 30%. Those numbers being rewarded very, very robustly by the market this morning. Let's talk about two pharma companies and focus Piramal Pharma and Aurobindo Pharma. Piramal because a US FDA pre-approval inspection at the Ahmedabad facility has ended with 0 observations. That's a positive. Stock is up 4%. Aurobindo Pharma is the other one that we're talking about this morning. They actually have a board meeting. They're going to consider a share buyback, and that has got the street excited, about 2% up. RVNL, the street's favorite, has a LOA from Central Railways for a 133 crore project. That stock up about 2% in morning trade. And Zomato, we talked about news reports that their platform fee has been hiked up to 6 rupees in certain territories. Is that a precursor for more platform fee hike per order? This is 6 rupees, is definitely an indication for profitability, 2.5% on Zomato. So these are some of the movers and shakers early this morning. But I reckon that really the morning belongs to HCL Tech out and out, Samina.
Not sure why, apart from the fact that the markets just want to, yeah. It's a great move. So what TCS did on Friday, HCL Tech is doing today. Now, let's not forget that exactly a quarter ago, these were the same stocks that were down 6% on back of their earnings. So a complete change in terms of what we are seeing this morning. Another space that is standing out for me, and I think Tamanna mentioned Irida, but also is how well Safari and VIP Industries. If you can pull them up, we'll see what's happening on those counters. Safari is up 7%. It's one of your top gainers on the Nifty 500. While we're at it, VIP Industries as well, 3% up move. The story here is that Investec has bet on the travel boom in India and initiated coverage on VIP Safari with very aggressive buy calls. That is one big reason why you're seeing a big up move in Safari and followed by VIP Industries. Both the stocks, one among the top gainers on the Nifty 500. Tanla is also back in the green, 6% high in Tanla platforms. Godfrey Philip is up 5%. Raymond is seeing another gain, 5% higher. Some reports are indicating that there could be a price hike by tire companies. So take a look at CEAT, MRF, JK Tires, all those counters should be seeing. And oh, you go. CEAT is up 4%, MRF is up 3%, JK Tire, which technically is a stronger 5% up move on that stock. So very, very strong trade, and Apollo Tires up 4%. So strong trade playing out for tire companies on reports that they've undertaken a price hike. Largely sector rotation, but like we said, the markets will find a reason to reward and move sectors as and when they find the need to do so. Zomato, on back of the increase in delivery fee, is also up 2.5% in trade. Oil and gas looks good. You've also got signed up 3%. So all in all, it's a good-looking market from the look of it. Broader markets looking far better than the frontline ones. On the sell side, you've got GE Shipping down 3%. Paint companies are slightly weaker. Defense, for a change, is trading on the sell side. And you've got some of those railway counters. So paint, railway, real estate, and defense are trading weaker. But the rest of the market, Tamanna, looks good actually this morning. But I don't know whether we saw the report, but VIP Safari, Investec, very excited about a travel boom and the stocks gaining on back of that.
Absolutely. That's an interesting report actually. VIP Industries has been set with a target price of 560 rupees by Investec. So that's a good 20% upside. They're looking at 560 managed stock, already 5% up. Safari, they're seeing with a target price of 2,800 with an upside of 31%. So that stock is moving. Evolving lifestyle, aspirational, etc. is pretty much there. But I think what's interesting in this report also is that they see branded players really enjoying that boom. But another stock, Z, is also doing pretty well this morning. Z Entertainment, remember, they have a board meeting for a fundraise tomorrow. That stock had run up on Friday's trade as well. Z again up about 2.5% this morning. If I were to break it up into buckets, I would say definitely a few of your tire stocks. Samina mentioned a news report that prices will go up. You have your luggage players, but otherwise, apart from that, it's about the pharma space as well, and your tech players. So these are the broad buckets of strength that you're seeing. Kush, very quickly, anything very exciting that you've spotted, breakout stories you've spotted in the first few minutes of trade?
Well, NFL that we discussed, had its fair share of volatility in the first 7 minutes itself, but it's trading in the green. So I think, that one continues. I think one stock that is actually doing well, rebounding after, brief pause is HBL Power. A lot of traction, in the power space again. So I think, this is one stock to be kept on the radar. 600, 625 are the next levels to watch for. Also, as you rightly mentioned, a lot of traction in the healthcare space. So Alchem Lab also seems to be, making a comeback after, 3 days of profit booking. Here, about 100-point stop loss or support zone comes in on the upside. If the breakout happens above this 5300, 5330 mark, then you're looking at another 200 points of gain close to that 5500 mark. So Alchem Labs, HBL Power, NFL, some of these names that, one can consider on the long side.
Chakri, what are you doing with some of these counters that are gaining today? So tire stocks are seeming like they're in a good space. A couple of weeks ago, most tire stocks made record highs and then they were on the sell side for the last few weeks. But with news of a price hike, SEAT, Apollo, JK are looking really good. And I know Apollo on the charts also looks good, and I'll come to Kush for that too. But Chakri, would you buy tire stocks at these levels, all trading close to record levels?
Both Apollo as well as JK Tires. JK Tires is a far more inexpensive stock. Of course, it's more leveraged, etc. But, the price hike was something will lift margins, and also for Balkrishna, because when the US starts cutting rates, the US market will also start picking up. Now, outside of that, I'd still stick with the NFL and Rashtriya Chemical Fertilizers, because they have both fundamentals as well as the budget momentum carrying them through.
What about you? How does Apollo look on the charts? In fact, extend that to the other tire companies as well. Anything that looks good, if you're buying strength, then I think Apollo, JK all become good trades, no?
Well, JK most certainly does, because it's had its fair share of consolidation. 50-day moving average tested as a support, and then rebounded above the 20-day moving average now. On the upside, the real resistance for this one actually comes in at 530, which is some distance away. So if you want to take a favorable risk reward ratio kind of trade, then JK Tire is the one that you should focus on. A support zone for this one comes in at about 440. So, a pretty healthy risk-reward ratio. Apollo 2, after a bit of a consolidation, is moving higher. Although 550, 555 might turn out to be the medium-term resistance where the stock might perhaps consolidate. But if someone is looking for a quick trade, then Apollo can also be considered. As I said, 555 is the target. Support comes in at 520.
Kush, what about HCL Tech? Runaway rally, not as exciting as what we saw for TCS. But remember, right off the bat, you were mentioning that on the response of the market to TCS was a bit delayed. No such complaints there as far as HCL Tech is concerned. Are you seeing a further upside through the day? Would there be a strategic trade here in play?
A purely momentum one, Tamanna, but here to 1675 is the next level to watch for. So, if someone's not already initiated a trade, despite the kind of move that the stocks already had, then you could consider one for, the levels of 1675. Now, there's a gap that's been created at this, 1560 to 1580 kind of zone. Sooner than later, it might just perhaps, come in and fill this gap. So keep your stop loss at 1570. And on the upside, you're playing for the targets of 1675.
Right. Thanks for that, Kush. That's trading calls coming in, and of course, fundamental ideas coming from Chakri as well. The market's outperforming most of its emerging market peers this morning. The Nifty at a new record high, 24,549 is what we have. It's well off the day's high point, but still trading marginally in positive territory. Lots of pockets of gain. IT is the one that's supporting the benchmark in today's trade once again. But along with that, you've also got sectors such as tire companies that are looking good and travel stocks that also gain. We'll take a break on that note, but next up, we bring you a conversation with the management of HCL Tech on the road ahead for the company.
HCL Tech certainly has delivered a revenue and EBIT performance in line. Yes, the profit after tax number was higher due to one-offs as well, but the other interesting part is, and not surprising, of course, that they have maintained the FY25 constant currency revenue growth guidance and EBIT margin guidance as well. CVK joins in, as usual, to talk about what he thinks is in store for the next 9 odd months. The street, CVK, firstly, thank you for joining in, of course. And the street seems to be now penciling in that the worst of maybe the demand outlook as well as deal win probabilities and margin numbers are behind the sector. I would love to understand how you thought of the quarter gone by, because it's slightly above estimates, and what you think about the next few quarters.
Yeah, Neeraj, the quarter, as I mentioned, has planned out exactly the way we expected, maybe slightly better than what we had expected. And from a broader demand environment perspective, I do not see that the environment has changed in any meaningful way. When we planned for the year, we assumed that discretionary spend would be similar to what it was in the previous financial year. And that is the situation that we are assuming now as well. We did not see any improvement in the environment during the last 3 months. So it is a status quo, I would say. And for us, we continue to focus on some of the key differentiating aspects in our business, like leading in with engineering as a differentiation and looking at solutions which are more driven by GenAI kind of capabilities. All of that are helping us to continue to be relevant to our customers, which is the most important element to continue growing the business.
Is that the reason why the deal wins, while lower quarter on quarter, but last quarter was just such a high base that you did what you've done in quarter this as well is a solid number. Is that helping in the deal wins as well? And is that the nature of the deal wins?
Yeah, I mean, if you see the TCV that we clocked in, 1.96, roughly $2 billion, that's significantly higher than what we did in Q1 of the last year, but a little lower than what we did in the Q4 of last year. I think this is the range in which we've been clocking in the deal wins, $2 billion. Ideally, we would like it to be a little higher, but at this point, a couple of deals that we expected to sign in Q1 got delayed. They got deferred to Q2. So from that perspective, we are quite comfortable with the deal win momentum that we have. And it has got a mix of small deals, large deals which have GenAI infused, small deals which are purely GenAI POCs and things like that. They're all part of the overall wins.
I'm curious to ask CVK, everybody's now talking about the Gen AI deal pipeline, started with your peer Accenture on June 20th. I mean, are you giving out a formal number out there? TCS yesterday, Krithivasan also had to say some numbers there. Just trying to understand how is a large IT vendor like you recognizing Gen AI deals, the quantum thereof, and the guidance towards that?
Yeah, at this point, we are not intending to call out any specific numbers because, first of all, it is now there are too many nuances to really classify a revenue stream or a pipeline as Gen AI because a lot of deals are combined opportunities. So at this point, we don't intend to call out anything.
Okay. The other quick aspect about this deal wins as well, because I was looking at out of the 4 notes that I read, a couple of them may be wrongly inferred that the company's view on demand is improving, because I just heard you say that in the last quarter, you haven't seen any kind of change there. So is this, just trying to understand, NA is such a large geography, a lot of CEOs and a lot of consultants are saying that until the elections are out of the way, there might be difficult to give very definitive clarity about what will happen in that geography. How are you thinking about it, CVK?
I mean, my position has been the same. I think the demand environment is similar to what it was in the last quarter. I don't say that it is improved. And we'll have to wait and watch, Neeraj, as to how this will evolve.
Is it an election-led thing, not about who's winning, but that the election uncertainty is out of the way in the NA region? Is it an election?
I don't think so. I don't think it's related to elections. But I think it's just the broader economic indicators and confidence within the corporates to spend on new initiatives, which is possibly holding back.
Okay. One quick word also on ER&D, and just love to understand, because you've got this strong leg up out there, right, with the presence that you have in that space. This quarter showed a bit of a downtick. Is it seasonal in nature? Can it reverse? Some clarity there?
Yeah, I mean, I did call out, we had a weakness in automotive and the medtech segment during the last quarter. We think it will recover in the coming quarter. In fact, we saw the overall tech and services vertical grow significantly in the last quarter, and we expect that momentum to continue.
Got it. Just one quick thing, CVK, a lot of focus by analysts around the change in the book-to-bill ratio, resulting in a material difference in what large IT companies could deliver in terms of revenue growth. TCS was referring to the same thing yesterday when they spoke to us as well. Just trying to understand, if the deal win momentum materially changes, would it materially impact what you do in the quarter, even if you're guiding to 3 to 5 right now? In the quarter, in the year, sorry.
See, I mean, first of all, we call out only net new wins. We do not call out renewals and rate cards and all that. So everybody's metric is different. So for us, it's a new deal wins, and this new deal wins has a very high correlation to the revenue that we deliver every quarter. Usually the deal wins happen in let's say in this quarter. For it to reflect in revenues, it might take anywhere between 3 to 6 months, sometimes even 9 months. So that will be dependent on the nature of the deal. So based on that, the revenue conversions will happen, Neeraj.
So, CVK, last question. Is it safe to assume that based on what you've said thus far, that the demand environment hitherto hasn't changed? If there is an uptick, because the street now seems to be believing that the worst is behind, if indeed the worst is behind, it will logically show only maybe in the second half, because you haven't seen too much of a change thus far, at least.
That's right. If at all there is some change, it would probably be visible in the second half, not in the first half.
Are you wearing that veneer of classic CVK, which is under promise and over deliver, instead of trying to be a lot more open / showing the bravado confidence?
No. I think I am being realistic. I would say 3 to 5% growth we've committed, and we expect to come within the guided range, Neeraj.
Okay, well, but solid deal wins yet again, CVK. As you said, the high base of the last quarter, this is still an impressive number. Thank you so much for speaking to us and such a candid conversation. Really appreciate your time.
Yeah, thank you, Neeraj. Appreciate it.
And viewers, thanks for tuning in.
Welcome back. You're watching India Market Open, and it is the stock of the morning is Apollo Microsystems. Pull up the counter and let's see what it's getting up to. We did flag this off in early trade this morning. Upper circuit on Apollo Microsystem. The reason being the counter or the company has received a Make-2 project from the Indian Army. This project involves the procurement of a vehicle-mounted counter swarm drone system under the Make-2 category of DAP 2020. We have it as A.K. Sai Kumar, whole-time director at Apollo Microsystems, joining us to tell us more about this order win. Hi, Mr. Sai Kumar. Thank you very much for joining us. Since you've, of course, had a listing, the stock has been on a tear. Investors, traders seem to have found a liking for Apollo Microsystems. We hear this morning that you've managed to bag a significant order. You want to walk us through the details of the order, the size of the order, the timeline, execution, etc.?
Yeah, good morning. Thank you for taking me on board. This is the Make-2 project. It doesn't carry any immediate revenue. But there are multiple building blocks that form this entire technology, which is highly futuristic in nature. Looking into the swarm drone threats that we are seeing coming in the near future. We have all the build blocks available, and we have a 75-week timeline to showcase this solution to Indian Army to bag a order for this. In terms of revenue, I foresee as an India perspective, it's close to 5,000 to 6,000 crore kind of a market potential. And across globe, we have already started talking to different friendly nations. The potential could be as big as 15,000 to 20,000 crores kind of a market potential there for this particular solution technology.
So just to understand, you will be showing your capabilities in the next multiple weeks, like you indicated, and once you're selected, will it then convert into an order? Is that a fair understanding?
Exactly. Yeah. This is called as a Make-2 program. So initially, the product has to be showcased. We have been shortlisted as one of the competent vendors, who could develop this complete solution for Indian Army's requirement. So we'll have to, showcase demonstrate this solution to Indian Army. Then it will get converted into a revenue-based order. That's how it is. That's called as a Make-2 program.
Right, and you said the market size, so this is anywhere upward of 5,000 to 6,000 crores in India alone, right?
Yeah.
Right. So if you successfully bag this one, then that could open the door for multiple more orders of similar nature coming your way.
Absolutely. As you already know that, drone attacks are a serious concern across the globe. The Ukraine war and other wars we have been watching. But the futuristic war is purely going to be autonomous in nature, which is a swarm of drones, not one drone alone. So this is a solution that's a hard kill, where a guided and unguided, rockets, will be fired, once they are identified through radars, and to kill the swarm of drones. So that's highly, critical, threat that we foresee in the near future. So this solution is primarily meant for that. And we have all the build blocks. We have been part of various weapon system development through DRDO. Several systems, we are part of more than 75 plus indigenous missile programs in the country. We have the ground systems, we have the rocket system, we have a guidance TOT also from the DRDO. And we have a complete weapon system complex build blocks available. So we are very confident that we will be able to integrate all the existing technologies that we have with us, in completing the solution in very fast pace.
Right. So before we talk to you about the significance of the industry and why now is such an important time, especially in conjunction with what's expected from the budget for your sector and for drones especially, the company has been growing quite well. Revenues have been growing at 24-25%, at least that's what I've seen. Looking ahead into the next couple of years, is that sort of growth sustainable? Do you expect to see a growth in order book in the upward of 24-25%? And is there an upside risk to that?
As far as the growth is concerned, last year we did close to around 371 crores, and we expect at least our revenues to grow by 50% in this financial year. You will be able to see through this our Q1 Q2 results, how this momentum is going to catch up, and probably by 27, we'll be able to achieve 1,000 crore top line. which we are supposed to achieve by 25, because Corona has pulled out us by a couple of years, but we have reframed our targets to FY27 to reach 1,000 top line.
If you want to give me a breakdown of your top line, I mean, 50% is significant. I'm sure market participants would get very excited to hear this. And also tell me where the key growth, which are the key drivers for growth going ahead into the next few years?
There are multiple programs which are getting into production, like you may be aware of programs called Pinaka and Tara. They have already gone into production, and the system integration partners have been identified already. And we are a key system supplier in both these programs, which will the the quantities will run in thousands in these programs, in both domestic as well as export. Apart from that, we are also a part of several indigenous underwater programs, lightweight and heavyweight torpedoes, which are for powering both the ATVP program, P-75 submarines, Scorpions, which we have imported. We are the only Indian player who is supplying the foaming system, which is a seeker for the torpedo for both heavyweight and lightweight torpedoes. And we have also developed some underwater mines, which we are talking to some friendly countries for export. We are applying for license, to Indian MOD for that. So as far as the order book point of view is concerned, there's huge amount of funnel which is already there. Good order book already available with my customers, where I have my proprietary systems going for it. So we foresee that this momentum will continue to grow. There's no stopping for it.
And what are the sort of margins you currently enjoy in the business across the board, blended margins?
On a gross profit level, it will be around 35%. But going forward, as the production projects increases compared to the development and production projects, I think further the gross profit margins are going to grow much better.
And also this futuristic drones that you talked to me about, and where you're of course going to soon bid for, where you have been selected amongst the three other players. What are the margins in that business? Is it better? Is it a better margin business in that sense?
It's still in nascent stage. I'll not be able to comment particularly on the profit margins, but it would be on a similar and much better than this.
Right. Also, you talked about exports. I want you to elaborate a little bit more on that. All of it sounds very exciting to us, and I don't know how much you can talk to us about, because this is sensitive, I do understand. But
we have a non-disclosure agreement, I'll not be able to touch base much in detail, but these are some of the underwater, weapon programs, which we are talking to some friendly countries, where we have developed the complete platform by ourselves, and we are in very active stage of discussions with them. Once the right time comes, we'll come to the market and announce it appropriately.
Right. Let's now go down to what the street also is getting excited about. And, you're from the industry. Drones is such an exciting, cost-effective defense equipment in that sense that we've talked about. And we're in the early stages there. With all eyes on the budget in 2 weeks, one from an industry standpoint and one from drones specifically, what is it that you're expecting in this budget?
Government has been quite industry friendly as far as the defense is concerned, and we also foresee that a similar initiatives will be taken in drones. We per se are not specifically are in the drone space. We are talking to two different small startup companies to acquire them, getting into a logistic drones for military applications and as well as for the loitering munition. But I foresee that, from the industry, other panels, members whom I am in touch with, I think government is trying to give some very, bring some remarkable changes for the drone industry, primarily, in the defense segment.
I want to get a sense from you, because we've talked to a few private players and they've stressed upon the fact that it's important for a PPAP sort of model or public-private partnership model to sort of pick up steam in the defense sector as well. Is that what you also feel? Do you feel like PPP could be an important sort of partner, sort of agreement that would help the sector grow even more than it is currently?
Obviously, the PPP model, which is more popular in a non-defense segment, particularly in the infrastructure and other segments, But as a very popular, hashtag word, but whereas if you see defense already, although it's not being used specifically like that, the triple P model is already being used. Where the private companies, the public sector companies, and the Ministry of Defense together, are working along with MSMEs in developing products. You are already aware that there is a huge, reorganization which is happening in DRDO, wherein DRDO will continue to be a technology, guidance partner in developing the technology, and more of an industry partnership is being welcomed into it. So triple P is definitely a model, which will be successful because different stakeholders have to get involved, in developing one state-of-the-art technology, and for which this is definitely a good pathway.
Right, sir. Also, I don't know whether you talked about the PLI scheme in particular, but I think that is another need and want from your sector specifically. And how important is a dedicated R&D fund and, of course, creating common testing facilities? Is that something you see getting accomplished or fulfilled in this budget?
Still, I think, there's a lot of gap. We see the global average, of investments that are done in R&D. Particularly from the private sector, vis-a-vis compared to India, which is running at around 1.2, 1.3% compared to the global average of more than 5-6%. I think that's where, we have to catch up. More investments from the private sector has to be done. Similarly, the encouragement from the government has to increase from small budgeted, programs in terms of investing in R&D to encouraging putting up more investments in it. Which also is backed by, confirmed, kind of, projection from the government that there will be a buy from their side. So that gives a lot of encouragement, from for the private industry, particularly, to invest more on R&D. We as a company, we invest close to 6 to 7% average of our revenues in R&D year-on-year basis, developing new technologies, research of the new technologies, and also augmentation of the previously developed technologies to meet the current threat requirements. But I think still some more encouragement is expected of in the upcoming budget, and we'll have to see how it goes.
Just another area that I want to quickly talk to you about, which some may argue has been addressed by the government by recent interventions, is of course prohibiting imports, promoting domestic manufacturing, and also liberalizing drone exports. Do you feel more needs to be done on this front to make India competitive with its global peers, and of course also restrict the amount of imports that come into the country? I know that list is extensive already, but do you think more can be done?
Yeah, the list is growing day by day. It's quite encouraging, but also that we see that a lot of players, although there is an embargo on a lot of products, still so many products are being imported and they're kitty designed, kitty manufactured back in India. I think the fundamentals of understanding what is critical in first, you talked about the drone. So what is actually still now being imported in drone, like particularly the motors, the engines, or the propellers, and other typical avionics systems. These various systems that are part of the drone, they have to be designed. More of an encouragement of a design and manufacturing in India has to be done rather than only a make in India. Just by putting an embargo doesn't suffice the problem. I think fundamentally imports of even the subsystems embargo has to be there, so that there is an encouragement for the Indian industry in developing technologies which are homegrown, so that when actually something serious happens, we still not be need to depend on foreign supplies for the components and subsystems for it.
Right. Thank you very much, Mr. Kumar. We'd love to chat with you, of course, when the budget is announced. Until then, good luck, and we'll see you soon.
Thank you. Thank you very much for having us.
Well, you too. Have a good week. In the meantime, the markets are looking good. The Nifty is at a record high. 24,554 is what we have in the index, 0.2% higher, outperforming most of its Asian market peers. The breadth of the markets also clearly biased towards the upside. So on the Nifty 50, most stocks are gaining, while you've got a handful of losers in trade. Broader markets are performing in line with the benchmark. The mid-cap, the small-cap, and the micro-cap index all trading with a gain of 0.2%. IT is a lead sector, but you've got stocks like LTI Mindtree now that have turned into negative territory. Asian Paints, Grasim Industries, Power Grid are some of your losers. On the winning side, the day belongs to HCL Tech. It's up and about with a sharp up move in trade. It's off the day's high point, but still trading with a gain of 3%. ONGC is looking good. Bajaj Auto, Cipla, Ultratech Cement are some of the other big gainers. In the broader market, though, the stocks that are going from strength to strength today are tire stocks on expectations or reports that there has been a price hike undertaken by tire companies. The tire pack is trading with a gain of 5% this morning. With that, we're completely out of time, but we talked to Manav Chopra on the other side and get a view from him on the markets. And of course, his top pick was JK Tyre and Apollo Tyres. Let's go across and find out what he continues to think about these stocks.